And we start off with the latest headache for the housing sector. The XHB homebuilder ETF dropping another 2% today, hitting its lowest level in over 2 months. The ITB construction ETF on pace for its worst week of the year. And some of the biggest names in the space down 10% or more since Monday. And while mortgage rates are down from their highs of the year, they remain stubbornly stuck above 6%. So is there anything other than a major move lower in rates that could get builders climbing again? Guy, what do you say?
I think it's a washout into space, and you're starting to see it now. We've talked about this. All these names, DHI, Pulte Homes, Toll Brothers, they all topped out either October or November of last year. They all sold off into April like everything else did. But the bounces they all enjoyed were nowhere close to the prior all-time highs. Now they're starting to roll, and there are a couple reasons, I think. Trump administration seemingly has a bullseye on their back. That's not helpful. But I think it's an employment thing as well. It's also an inventory thing. I mean, listen, real estate is regional, I get it, but if you look across the country, you're starting to see inventory builds in some really interesting places, and I think that's going to put pressure on pricing, which subsequently puts pressure on these stocks.
Remember Diana Olick was at a housing conference maybe 3 weeks ago or so. One thing that really stuck out in her reporting was that builders are buying down an average 100 basis points in mortgage rate. So by that math at that time, you know, you're getting down sub 5.5%. So if we have to wait for rates to clear that mark, that's a long ways from here.
Well, and it's margin destructive. And it's nice having Mike here because I know he's got some theories about corporate margins in general. In the big picture, what may be happening in the housing market, especially because of the stuff that Guy is referring to from the White House, if they're talking about supply side and they're throwing margins out the window, then you have a dynamic here of buying out mortgages. I would also just add that haven't we already seen the housing market get this rally on lower rates? I mean, that to me is what it was on the second spike of this double top that I think you're selling and continue to sell here. So I don't think you need to chase it. The one thing that's kind of interesting, we had our conversation about data center last week, and it's kind of cool that in the XHB, you have some of these data center plays that are the HVAC plays that have traditionally been in residential housing. So a Train, a Carrier, some of those names that are actually some of that data center infrastructure build out, and they're kind of interesting. So take a look at those, but I'm not sure you want the housing part.
Yeah, the cooling names that have exposure to the data center are very interesting. Is it the consumer here that we're looking? I mean, what's happening?
No, this is a structural problem in the housing industry, and this is, by the way, maybe the first sign that we're going to see some tariff implications on earnings, right? So the tariff, I mean, the higher cost is what's killing the home builders. Don't forget the home builders took a lot of share from the existing home market because there was no supply. What was that?
Well, you said took a lot of share, and it sounded like
well,
but you would never do that on cable TV.
Yeah, but at the end of the day, I mean, they've been discounting, and now new home prices are actually cheaper than existing homes. That's the first time we've seen that. So there's a structural profitability problem in this industry because of costs, and so lower rates is not going to help their profitability. I like the housing space, but the home improvement sector on activity picking up if rates come down.
Yeah, labor is probably somewhat of an issue there, too, when you think about that. So you have the double whammy of just increased input costs and then labor. You know, it's worth noting 30-year fix, as you said, Mel, is at, a 1-year low. It's at 6.3%. Well, that's where it was last October, right? Like the same level here. And the fact that the ITB is down 20% from those all-time highs, it tells you that there's something else going on here.
Yeah.
And really quickly, it's interesting because Mike's talking about the home improvement and that dynamic. Home Depot's been pasted too with the group. I'm not, and I actually like Home Depot. I think these are levels both on the stock. Somewhere certainly 350 is a good level of support, but I think the valuations and the numbers we've gotten from Home Depot tell you they are a margin story that's helpful.
You could have said spackled.
Spackled.
Oh, that's a good one.
You could have done spackled because the people may not know what pasted means.
Pasted.
Stock,
have you ever spackled?
425 down to 377. That's pasted.
I shouldn't say it, but have you spackled before?
You know what? You say that thinking that I have not spackled
Who
before.
hasn't spackled
Who
before?
hasn't spackled?
If you can't spackle, you're in trouble.
My people don't spackle.
Your people meaning
what are your people?
Be careful.
The tribe.
Real quick, I mean, a name like Mohawk Industries, for example. I mean, take a look at MHK, which made its all-time high in 2017, and it's had some bounces along the way. And these are the names I think Mike is talking about. Some of these names that get bombed out, and then if rates were to go lower, you look at some of these names. But I don't think we're there yet.